Nifty Metal Index. It's up 1% in trade today, and it's one of the top performing sectoral indices today, and it's up 4% in the last 5 days. And it's not been the best year for metals. The index has been under pressure since the start of June, and it's around 8% low from the year's high and has been correcting largely from the first week of June. But to talk about what's leading to an uptick, we're joined by Varsha, Rucha and Puneet. Now today's top stock performers in terms of intraday's high has been Jindal Stainless, Nalco, Ratnamani Metals and NMDC. And as per volumes, we have Ratnamani Metals again, SAIL, NMDC and Tata Steel. But first I want to come to Varsha. Varsha, we have 3-4 factors that are leading to an uptick. Maybe what's the first factor that you're tracking that has led to an uptick in the index itself?
Well, Mika, if you see, copper and aluminium and lead prices have improved week on week. So if you see, copper prices were up 1.75%, while aluminum prices were up around 2.46% week on week, and lead prices were up 2.2%. Now, the rally in the metal stocks that can be attributable to several factors. First, there's a significant surge in demand coming from China, which is a major player in the global metal market. Also, if you see, China is a major consumer, when it comes to industrial metals, and now it has also announced measures to support its crisis-hit property sector. The real estate sector is a major contributor to China's GDP and has been struggling since COVID-19. And the other thing is the non-ferrous metals, especially those used in the EV sector, are experiencing increased demand, contributing to the attractiveness compared to ferrous metal. And metals are also rallying due to expectations that the US Fed might implement a rate cut. And when the interest rate falls, general business condition improve, which turns or boost growth. You spoke about the non-ferrous metals, but it's also the ferrous metals. We have especially iron ore prices. Now they've seen a negative trajectory. But Puneet, what's the view on that? I believe you had a brokerage note coming right today.
Yeah, so the prices have bottomed out around the $90 per range rate, and this is the global iron ore prices specifically. And we have seen that they've corrected roughly about 31% in this particular YTD currently. And that's also because of China, because China is not consuming as much as they should or essentially have in the past. When you look at the prices, they are expected to move higher from here on, go around the $100 per range, and higher prices are also due to recovery in some form in China specifically. Another key factor is because of onset of autumn season, that's another one of the key factors, and this is as per Nuvama research report that's coming out today. Apart from that, who would be one of the beneficiaries of higher iron ore prices going to be NMDC. Now NMDC is of course an explorer as well as a producer of this particular metal, so they are going to be one of the key beneficiaries. And plus they have mentioned that they are potentially not likely to take any kind of price cuts as well in this particular month of September. So that will augur well for the Q2 financials as well going forward. The company has another advantage that its prices in India are roughly around 20 to 21% at a discount to the global iron ore prices as well. So it can have the higher market share in this particular country for the same. And potential, rising iron ore prices, one of the other beneficiaries, of course, the steel maker, specifically Tata Steel, JSW Steel, SAIL as well as Vedanta. So these are some of the beneficiaries from the rising iron ore prices as well, but expected to bottom out around the $100 per range.
Another development that did come by was from government support. And Rucha, I think this was an anti-subsidy duty that was actually extended. So could you give us more details on that front?
Sure, Mika, but let me just talk to you quickly about what is anti-subsidy duty. Now, this is the duty which is imposed by the government on subsidized imports that make them more expensive to import, and hence offsetting the unfair price advantage that the imported goods get. Now, government has extended this kind of duty for additional 5 years. Now, this duty is extended on steel imports from China and Vietnam countries, and it is extended for welded stainless steel pipes as well as tube imports. Now, the benefits of this duty extension will apply to stocks like Tata Steel, JSW Steel, Welspun Corporation, Ratnamani Metals and Tubes as well, and it will definitely help these companies to be at par with Chinese imported goods and then offset the unfair advantage that those imported goods get. Now, the excessive Chinese imports were at lower rates and they were hurting the domestic companies' market share as well. Now, just lastly, talking about the share of the imported goods, the Chinese imports were at $32 million per ton discount to the Indian steel, and this will definitely benefit the steel companies.
Yes. Yeah, thank you, Rucha. You know what this basically means for steel companies is when the landed import costs are at a discount in terms of a competitive market space, it hurts these companies like you mentioned, and that's why many of these counters were, seeing lesser volume growth. But, there are still headwinds in the sector. We have signs that of picking up price recovery, but headwinds still persist. Varsha, in terms of overall prices of the non-ferrous or base metals, how have they performed in Q2?
Well, Mika, so the base metal prices for copper, aluminium, lead and nickel have corrected in the range of 2.6% to 5.8% till date in Q2. Now, prices did surge in Q1, benefiting the metal companies overall. But while there have been price recovery in the last week, but the overall prices remain in a negative range. And this actually, Mika, will impact Hindalco, your Hindustan Copper and Nalco as well.
Thank you for that. And one more point that I want to put across, it's a little complicated to understand, but it's going to be a key overhang on the metal and mining companies. Now, this is the retrospective application of mineral taxes. What retrospective basically means that it's this application of taxes applied to previous period. So in August, the Supreme Court of India passed a ruling which was a key negative to mining companies and could affect companies with mines mainly in Odisha, Jharkhand, Karnataka and Goa. What the ruling basically was that the mining companies will now have to pay additional cess to the state governments for all the operations that took place between 2005 and 2024 of June. Now, this cash outflow is, it stands to impact the companies. However, it can be contained to a certain extent due to a 12-year payment period. When you talk about who, has the most liabilities, we have counters like Tata Steel, JSW Steel, as well as Hindalco. The incremental impact on the company's EBITDA could be of 2 to 3% as per Nuvama. The least impact, however, could be on Coal India and NMDC because these companies have a pass-through clause with their customers that allows them to pass on the liabilities, to their customers. When you talk about Tata Steel, they've already set aside 17,000 crores of a potential liability for these mineral taxes. SAIL, JSW Steel could see 2,900 and 4,800 crores of liabilities as per Nuvama. But lastly, I think it's important to cover the valuations of these companies. Puneet, where do they stand right now?
Well, they are trading at a very high premium because the earnings have not come in this particular financial year. So that's the reason that the price to earnings have also moved up substantially. And this is higher than the 5-year average as well, when you compare it to the last 5 years of the company. Now, Morgan Stanley has the industry valuations and they have said that, it's unlikely to visit the historical highs which were there previously. It's also saying that the steel stocks are the ones that are expected to underperform due to unfavorable valuations. And that's purely, going from the earnings standpoint. And that's been one of the key reasons that, Morgan Stanley specifically has an underperform rating on all steel stocks.
Thank you, Puneet, for giving us that perspective. And I think lastly, what do analysts say? Even though there are so many headwinds and tailwinds for this sector, what's the, consensus analyst view or company specific right now?
Right. So talking about the bullish stance, there are highest number of buy calls on Hindalco, Jindal Steel, and as well as APL Apollo. There are 14 buy recommendations on Tata Steel and JSW Steel. Now, analysts are also positive on APL Apollo despite it being the worst performer over the last several months. Now, talking about the bearish stance, the highest number of sell calls although are on SAIL and Hindustan Zinc. So this is the overall view on what analysts believe, both bullish and bearish stance for the steel industry.
Yes, thank you, Rucha, and thank you for Puneet and Varsha for joining us and, kind of giving us a perspective on how the metal space is faring. Let's just take a quick market check, especially the Nifty Metal, since we're talking about that right now. When you look at the Nifty Metal index right now, well, it's up almost 1% in trade today. It reached an intraday high of over 1.5%. It spared some of those gains, but it's up nonetheless. When you talk about, the counters that have been gaining on the Nifty Metal, especially today, well, we have APL Apollo tubes, which is up 3.5%. Now, this is the worst performer on the index on a year-to-date basis, but it still has 15 buy calls. We also have Vedanta, NMDC, and JSPL and Jindal Stainless Steel that is up 2%. Well, that was what we had for the Nifty Metal space, but